Remember when these were fast? And these? Technology has improved the world around us. So why is it simple to send one of these anywhere in an instant, but not money?
Bartering to shell, to gold, to money.
What if we made money truly global, stable, and secure? What if everyone was invited to the global economy with access to the same financial opportunities? Introducing Libra, a new global currency designed for the digital world, backed by the belief that money should be fast for Ope in Lagos, simple for Saul's family business in Manila, and secure for Betsabe when sending money home to Mexico City. It's powered by blockchain, making it safe and accessible, no matter who you are or where you're from. So join us as we move towards a world where money works for everyone. This is Libra, and it's just the beginning.
Why would the banks disrupt themselves by introducing a digital currency that would make it easier for consumers and businesses to disintermediate the banks? Well, the banks may not be the innovators. It may be that they are the reactors, that they will react when others innovate. And I'm sure that they've considered the trade-offs involved in whether to disrupt themselves by introducing digital currencies, or whether to wait and react when others introduce digital currencies. Right now, digital currency sounds very edgy and kind of alternative lifestyle, but it's becoming the mainstream. And so the banks, the largest banks in particular, are very aware of this. They're investing in the technology, and they will provide this service as soon as it's profitable enough, after considering the cost to them of losing some of their current business that they're going to disrupt. Banks will eventually either be leading or following, but they'll be involved. They can't avoid it.
The final countdown has begun, and a stillness has fallen over the stadium as all eyes turn to one car.
This ain't a race. This is a showdown.
Go!
After Facebook announced the launch of its own cryptocurrency, the central bank accelerated its work. China is already well on its way to becoming a cashless society. Over 600 million Chinese, almost half the country, already use apps such as Alibaba's Alipay and Tencent's WeChat to pay for everything from groceries to bike rentals. Today, the two companies handle close to 90% of China's third-party mobile payments market. The central bank's currency will provide a new payment tool to substitute cash. Unlike Alipay or WeChat, users won't be limited to paying within one platform. China plans for its crypto to be accepted by any individual or institution, just like banknotes and coins. If Beijing's plans materialize, China could become the first major nation to go completely cash-free, and that could reverberate across the global financial system.
Chairman Powell, well, first off, I'd like to thank you for facilitating our meeting with Governor Brainerd. Representative Hill and I had on digital currency. We really enjoyed that, as well as the meeting with the staff, who were excellent, and it's great to see how plugged in they were to this issue. Now, in a speech last week, Governor Brainerd highlighted, quote, the role of central bank digital currencies in ensuring that sovereign currencies stay at the center of each nation's financial system. Do you agree with her characterization? And in particular, do you think that establishing a digital dollar would help ensure that the U.S. dollar continues to serve as the core of the U.S. and the world's financial system?
Well, to take the first part of that, I think having a single government currency at the heart of the financial system is something that has served us well. It's a very, very basic thing that really hasn't been in question. And I think, before we move away from that, we should really understand what we're doing. So I think preserving the centrality of a central, widely accepted currency that is accepted and trusted is an enormously important thing. I think whether a digital currency moves us along that path or not is an open question. As you know, every major central bank is currently taking a deep look at that we feel like that's our obligation. Technology has now made this possible. Private sector's innovating, they're doing it, so I think it's very much incumbent on us and other central banks to understand the costs and benefits and trade-offs associated with a possible digital currency.
So how would you characterize your state of progress on this compared to other countries? The Swedish central bank developing an E-krona, the Chinese. The reason that one of the reasons there was so much concern about the RIPPE project is they would immediately have scale if they just rolled out the product. Another entity in a position to do that is the Chinese government to roll out at scale using their already established payment by cell phone systems. They would immediately have a scale comparable to Facebook if they rolled that out. And so how would you characterize our ability to respond to this potentially competitive threat?
So we're working hard on it. We have a lot of projects going, a lot of efforts going on that right now. We haven't had the problem that many of you mentioned Sweden. A lot of the Northern European economies have moved away from cash to a remarkable degree, and that really has not happened in the U.S. economy, even though it seems like it must have happened with our kids not using cash very much. Nonetheless, the amount of cash in the U.S. economy continues to grow at faster than nominal GDP.
Trouble at the start. A misfire traps Speed Racer, causing a collision. Uh-oh, look out.
This is a time when Americans are depending on their banking system more than they ever have before. When we made a decision collectively in this country to shut down the economy very broadly back in March, we depended on the banks to deliver benefit payments in the form of paycheck protection program loans and checks sent from the Treasury Department. And the problem is we were sending those across 19th century banking rails. Many people said that it took days or sometimes weeks to receive their payments. And my vision is that we need to get to a place in this country where payments can be transmitted virtually instantaneously, where errors can be eliminated. And it turns out technology exists today that can help us do that. So we need to get there, I think, sooner rather than later.
You've talked about a new payments charter. What does that mean? And what is the technology that we have today that exists that circumvents, to your point, the 19th century rails that the train has been running on so far?
Well, it's really interesting, Julia. If you look at the payments business over the last 30 years, there was a time when all payments happened through the banking system. And in the last 10 or 15 years, with the rise of fintech, largely dominated by a bunch of Silicon Valley firms, it turns out that technologies exist, whether they're based on blockchain or other kinds of networks, that allow payments to go much faster. And as a result of that, what's happened in this country is that millions and millions of daily payments no longer are principally processed by banks. They're run by companies like PayPal and Stripe and Square. The question for the payments charter is, do we think it's a good thing or a bad thing that all of that activity is now happening outside the banking system, where the examiners who work in my agency can look at them and make sure that there's fraud being prevented and make sure consumers are protected? Or do we think it would be better for them to run entirely outside of regulation? I think the best solution, which you see in other parts of the world, including the UK today, is to have faster payments that are innovated by private companies but are supervised by federal watchdogs like us. That I think is what the future looks like.
I mean, the pushback that you're getting here is from existing banks, whether at the state level or those that are federally regulated. I mean, they have existing businesses, I guess, to protect. The problem is they don't best serve the customer.
Well, that's the thing, Julia. And if you look at what the reason is why so much payments activity has moved outside of the banking system, part of it is because consumers want to receive their services in a different way. I mean, let's face it, there was a time when we all used to buy our clothes in department stores where we could also get our oil changed and have lunch. The world changed on the high street shopping market, right? Now we all go to boutique stores. We buy our computers at Apple, our jeans at the Levi's store, et cetera. Banks are sort of the last bastion of the amalgamated comprehensive supermarket, if you will, of financial services, but that's not the way consumers shop anymore. The other thing that's really important is markets look at these companies very, very differently. So it turns out the return on equity for startup tech companies is far higher than the return on equities for banks, which is what creates strong market incentives for these services to move into specialty platforms and outside of comprehensive banks. All of which means that if we don't rethink what the bank charter is and find a way for the bank charter to be broad enough to encompass services that were historically provided by banks, we're going to have a problem.
Ooh, that kid is wily.
I don't know how he got out of that one.
Thank you, Conan, for having me, and I think it's a pretty important topic. CBDCs and digital currencies in general have really become a hot topic nowadays, and I truly believe that 2020 is the year for digital currencies. Now, some people may argue and say that central banks have started to look at CBDCs or digital money in general as a direct result of Libra, but I personally believe that it's just a natural evolution. I mean, we are embarking on a new era, a new digitized era. We're moving towards digitized economies. So I believe it's very important and imperative that central banks really take a close look at digital currencies, and those that fail to do so may struggle in the future. I think in terms of money supply and methods of payments nowadays, if you think about it, we have been depending on electronic money for a long time now, for decades and decades ago, ever since the invention of debit cards or credit cards. But I think today, if we combine the advent of smartphones along with the advancements in technologies, such as distributed ledger technologies, the internet, having more efficient telecommunications, for example, all these combined together will drive people to demand more efficient, easier peer-to-peer payments and transactions. And I think digital currencies really are promising to provide just that.
And I also think as we view 5G coming online around the world, a brave new world of connected devices that will have a lot of automation and logic built into them, that's when you start to understand how this, these stores of value and mediums of exchange need to keep pace with the digital economy.
Exactly. If I just may add to that, I mean, digital currencies in general hold a lot of promises in terms of whether it's for local domestic peer-to-peer transactions, making them more efficient, especially in developing countries where their local RTGS systems are not very efficient, for example. They hold a lot of promises in providing more efficient cross-border transactions, bypassing the traditional interbank correspondent banking systems today. They hold a lot of promises in terms of financial inclusion, for example, more promises in terms of traceability for the regulators. But I believe that it's still very, very early days, and that it's important that central banks really study them very, very well and measure the trade-offs between the benefits and the risk implications.
Introducing that digital euro would allow the euro system to be at the cutting edge of innovation. In theory, a CBDC, central bank digital currency, can be designed for wholesale or general purpose use. Digital wholesale money is not new, as banks have been able to access central bank money for decades. But new technology can be used to make settling financial transactions more efficiently. It also opens the possibility of a retail CBDC, which would be very innovative in that it would be accessible to a much wider audience, but it would be subject, in our view, and in the proposal that we're working on, to three key considerations, and I will finish with these three considerations. One, maintaining access to central bank money. So the euro system would continue to ensure that all citizens have access to banknotes at all time. The digital euro in any event would be a complement to, not a substitute for cash. Together, they would support financial inclusion and offer a choice to consumers. And this is in line with our policy of respecting consumer preferences when it comes to means of payment. While helping to address the consequences of a decline in the use of cash, particularly accurate in certain countries in the euro area, a digital euro would also ensure that sovereign money remains at the core of European payment systems. And it would support innovation by providing an alternative to private forms of money for fast and efficient payment in Europe and beyond.
So you've got Riksbank, which is the Swedish central bank. They've announced a one-year trial for an E-krona in order to just basically figure this out. So it's not yet a central bank digital currency. This is more of a learning project for them to kind of test the idea and work around it. And basically what they saw was only about 10% of Swedes use cash on a regular basis anyhow, compared to about 70% in the US. But that has taken a drastic hit over the past about 2 years in terms of drop. And so that decrease really pushed them to the idea that since everybody's already using kind of the third party idea, like paying with a credit card through their bank or Visa or whatever, that we should go the next step and really look at what a digital currency would mean if it was actually coming from the central bank itself. So this is moving towards that idea of a CBDC for Sweden. Yeah, it's really cool. So Accenture won this contract last year to start exploring this idea and developing it with them. They're going to deploy it on R3's Corda. The basic idea is to create a simple, user-friendly digital wallet that complies with all the security and performance requirements that they have in place, so that you can use the app to make deposits, transfers, and then make and receive payments. They also, part of the trial is to have payment cards and wearables like smartwatches included, so that it basically, again, to make this as seamless as possible for people to use.
The Bank of Thailand announced that it plans to develop a prototype to test real-life business use cases of its central bank digital currency, CBDC. The bank said in its official statement that before it launches the CBDC payment system for all businesses, it plans to test it with large-scale enterprises. They have partnered with the largest cement and building material provider in Thailand, Siam Cement Group (SCG), and Thailand-based fintech firm Digital Ventures Company Limited to pilot test their payment prototype system. The project is scheduled to start in July 2020 and the pilot test with SCG is expected to conclude by the end of this year. With CBDC payments, the bank aims for a more efficient payment system with increased flexibility for fund transfers and faster payment settlement between suppliers. Following the pilot, the Bank of Thailand will assess the system's feasibility and a way to easily integrate CBDC payments on other business platforms. The bank said it will build the CBDC payment prototype based on the experience of Project Intathon, a collaborative wholesale CBDC payments project conducted by the Bank of Thailand and 8 other financial institutions that was completed in January. China has remained a frontrunner among the slew of countries that are experimenting with developing a CBDC. While there are still only rumors about when China will roll out its digital yuan, the country has continuously emphasized the importance of the CBDC and ramped up its development process. Only recently, the Bank of Canada posted a job opening titled Project Manager, CBDC, signifying that Canada too has stepped into the space of central bank digital currencies. Banque de France also successfully tested a digital euro last month.
Talk about the central bank's view, concretely the Swiss National Bank's view about digital currencies. Now, you may be familiar with the saying, "In God we trust, all others pay cash." That has been a common saying for quite some while. You sometimes see that in a store. Economists have turned that a little bit around. They have said distrust is the root of all money. Now, why is that? Let me quickly explain. If I buy something from you, I can either say, I pay you tomorrow, or I pay you next week, so I can buy something on credit. And that requires that you trust me. You will have a counterparty risk. I'm your risk. The risk is that I will not pay you tomorrow or next week. It's basically the same if I pay with a credit card or if I pay with a debit card. With any kind of a bank transfer, if I pay with a debit card, but that basically means that the claim that I have on the bank, my account, I transfer that to you so that you will have a claim on the bank, but then you have still a counterparty risk, namely the bank where your account is could go bankrupt. So you're not getting rid of that risk. And money, this thing, if I pay you with this, you don't need to have a counterparty risk. That's something that doesn't have a counterparty risk, it's the thing itself. There are other issues with trust involved here, but basically if I pay you that, it doesn't matter to you how creditworthy I am, it doesn't matter to you how creditworthy my bank or your bank is, you have the thing in itself. And that's why economists say that money is basically a substitute for trust. You don't need to trust the counterparty. Now, if you look at the world as we have it today, the banknotes, that's basically the only monetary asset, the only traditional monetary asset that you can acquire that doesn't contain a counterparty risk. Central banks also have deposits, which per definition also have no counterparty risk because central banks produce that money. They cannot go bankrupt. They can always produce that type of money, but you cannot have an account with your central bank. Only commercial banks can have accounts with central banks. And then the commercial banks gives you an account, and that's where, again, your counterparty, your credit risk comes in with the money. Now, the latest development, of course, are cryptocurrencies. Bitcoin, for instance, that's also the thing in itself. When you get a Bitcoin, there is also no counterparty risk involved, like also with gold, for instance. But the problem there is that, at least at this stage, it's not very widely accepted. I mean, you can pay with Bitcoin in a lot of places, but it's clearly not everywhere. The same also with gold. And the other problem is, of course, that you have these price fluctuations. Now, if you just want to save in Bitcoins, then it doesn't really matter that much to you. Like it doesn't really matter to you that equity share prices change from day to day or bond prices change from day to day. But if you want to make a payment with it, then it matters. Now, the solution that a lot of cryptocurrencies came up with is that they create stable coins. But stablecoins basically introduce again this counterparty risk because a stablecoin basically promises you that you can redeem that stablecoin for central bank money again, either for commercial bank money or for central bank money. It's basically the same thing that the commercial banks do. So bank deposits, in a way, are also stablecoins because you can always go to your bank and get the real thing this here. So in that sense, it replicates what we have in the traditional sector. So what now happens is that a lot of central banks start to talk about whether they should not give access to households, to retail customers, to electronic versions of central bank geld, and that is either in form of deposits or in some kind of a cryptocurrency token form. Now, the Bank for International Settlement, which is basically the bank of the central banks, has made now 3 years in a row a survey among central banks asking them, are you working on CBDC, central bank digital currencies? And you see that I think about 66 central banks have responded, and you see that a large number among them say, yes, we are working on it, it's 80%. And you also see that it has been steadily increasing over the last 3 years. If you ask them, what are you working on, then about 12%, 15% or so say wholesale central bank digital currencies, which means these are only available to bank, just nowadays the bank deposits, not to retail customers, households. And you see that about 30% say we are working on general purpose central bank digital currencies, which would be available to everyone. And then a larger number says both. Now, some say, well, clearly they work on that because this thing here is disappearing. But if you look actually at the statistics, it's not that true. Very often Sweden is named as an example, and if you look at Sweden here, SE in the lower left square, for them it's really the case. You have on the horizontal cash used for payments, on the vertical cash used for store of value, and you see that Sweden is the only country where cash use for both purposes is declining. But for all other countries, at least use for store of value, it's actually increasing, it's not decreasing. If you look at use of payments, then you have a mix, but you still have a large amount of countries where use of cash here, banknotes, is still increasing for both purposes. Switzerland is an obvious example. You see that basically on the line there, that both use for store of value and use for payments is still increasing. Great Britain is basically just in the center where nothing is happening. It's not decreasing, it's not increasing. But so Sweden is really a special case. If you ask central banks, why are you then working on CBDCs, then you hear a lot of times payments efficiency. And I think one thing that we learned from Bitcoin, other cryptocurrencies and fintechs is that the payment system has been very inefficient, especially the cross-border payment system. So there needs to be something done about it. We can send an email or messages within seconds from here to the United States, but if you want to make a payment from here to the United States through the commercial banks, it takes several days, and there is clearly no need for that. And that's one of the reasons why central banks have been starting to work on that.
But look out, as they approach the big drop, here comes Speed Racer.